Welcome. In this video, I'm going to discuss a new feature that I released in version 4 of Price Action Harvester Automated that I've called Special Operations. So I released version 4 earlier this month. We're in February of 2022. And this particular feature is a little bit unique and different than the other new features that I released in version 4. I've called it Special Operations for a reason, in that it's an event-driven strategy that any aggressive trader can use and take advantage of strongly trending days that the market gives us. Now we've gone through in the past couple of years with the COVID ups and downs, where there were strong trending down days, strong trending up days, and now we're of course entering other phases. So we've got geopolitical issues throughout the world with Russia and Ukraine, China and Taiwan, Iran and Israel. And then you have potential new variants of COVID. We have rampant inflation. We have midterms and then elections, presidential elections in 2024. So between all of the stuff that's happening, I suspect that we're going to get several strongly trending days, whether that trend is up or down. What I deem to be strongly trending and how that can be incorporated into Price Action Harvester Automated version 4 via the Special Operations feature is that you can essentially take advantage of any news that breaks that coincides with what you're seeing on the chart. For example, you as a trader, you get up in the morning, you take a look at the market, you see several long, powerful, big red bars. You check the news, whether it's CNBC, Fox Business, Twitter, you check it, stock twits, you check the news and you see there is some X or Y or Z factor that is causing this downturn. So now you know that there is some tailwind, okay, that's propelling the price down. You can take advantage of that. Now, as a manual trader, you're going to have a lot of potential emotional mistakes that you could make. Now, you could be a trader who's been trading for decades. You could have been a floor trader. But at the end of the day, you're still human, and you're going to make human mistakes, whether you chase, whether your stop is too narrow, whether you get scared because of a momentary adverse price action and you get out too early. Those are all things that human traders do on a relatively consistent basis because they're human and they have emotions built in. But a system solves that problem. Now, in this system, in Price Action Harvester Automated version 4, I essentially have added multiple entry adjustments, but specifically, I've also made exit adjustments. Now, a lot of people place a lot of emphasis on entries, which is correct and good, but they don't place enough emphasis on exits, which is a negative, because exits are just as important, and if you ask certain professionals, it's even more important than your entry, slightly more important than your entry. So for that reason, let me demonstrate. I guess that's the easiest way to explain how this is. Now I'm going to do a couple of demonstrations here and explain what I'm doing. So this is Special Operations. So let's go ahead and pick it. Today is Wednesday, February 23rd, 2022. So let's drop this down to Wednesday. This part, day, time, and direction, these 5 entries, whether it's long or short, are part of a different strategy. Okay, this is a different algorithm. And Special Operations, which I deliberately placed towards the bottom, as a different algorithm. Special Operations is a far more aggressive short-term algorithm, and it is essentially going off of whatever you designate, whether it should be go long event-driven long or go short event-driven. I specifically called it that so that the trader remembers that there should be something, some sort of tailwinds or headwinds that's essentially driving what they're seeing on the chart, and it's not just guesswork. Well, in this system, I've also added money management features so that you can essentially be far more granular than in previous systems that I've developed. So Let me go and demonstrate further. So I unchecked this portion because I don't want this algorithm to run. That's essentially an algorithm you want to turn on, let's say about 80-85% of the trading days. So there are about 240, 250 trading days in a given year, assuming you don't trade on weekends. Then, about 85% of those, this strategy under daytime and direction is something that a trader could potentially turn on. However, on the other days where it's very strongly trending, then it would make more sense in this system for a trader to turn on, or I should say enable, special operations. So I'm sure you guys have heard talking heads like Jim Cramer and others on Twitter and FinTech and FinTwit and other places have said the words turn on the buy algo, or somebody turn on the sell algo. Well, this is the same idea. Okay, you're essentially going to be able to turn on your buy algo or turn on your sell algo. Okay, and it's going to run for you. So let's say today is Wednesday. It is Wednesday, but let's say on Wednesday you see the market in the morning and it's tanking. You look at the news, there's reason for it to tank. So you say, okay, I don't know what the future holds. I don't know what's going to happen towards the end of the day, but I do know what I can control. I can control my stop. I can control my price target. I can control my money management. Moreover, I have another part here that I've added, which is move stop, where if you hit a particular target in unrealized profit, and you've been in the trade for X number of minutes, or X number of bars in this case, but this is a 1 minute chart. So it's how many minutes you've been in the actual trade. And if price has moved against you, then you can get out earlier than your price target or your stop. So that gives you another feature, another way to protect unrealized profit. So it's got very cool features. I've gotten good feedback on it, thankfully, thank God. Worked pretty hard on it. So let me go ahead and demonstrate this for you. So I'm going to put my money management features, since let's say I'm going to trade NQ. NQ is very volatile. So I'm going to put an 80 tick stop for that. That's my risk per trade. And of course, this is hypothetical, guys. So this is hypothetical. I'm also going to have a profit target of 550, lofty profit target, but that can get hit in NQ quite easily on certain days. So 80 means essentially it's $5 a tick on NQ. So NQ is the NASDAQ 100 for those that are now getting into futures trading. So essentially that's a 400. So if I were to take a loss on this next trade, if I was in the trade, I would be down $400 plus slippage, which I'm going to add as well. So let me do that before I forget. So plus any slippage. Okay, I just added a tick there. So I could be down $400 plus, maybe 405, 410, okay, something like that per trade. But let's say I want to take $1,200 risk today, but I'm going to put $1,100 for a reason. I'll explain why. And I'm going to say if I have, let's say, 4 losses in a row, I want to be out. So either 4 losses in a row, I'm out, okay, or $1,100 is hit and I'm down $1,100. So when the trade is flat, when we're out of the position, my system will look to see if you're down $1,100 or more. If you're down $1,100 or more based on what I just inputted, because I put $1,100, then it's going to say I'm not going to look for any more trades. So the system will stop looking for trades. Okay. I also have 5,000 here. If I hit 5,000 in my profit, then when the system is flat and I'm up at least 5,000, then the system's going to stop looking for new trades. So uncheck the move stop for now. But for the move stop, I want to be quick about it, but I'll also protect myself with 80. So I'm going to say if I've been in the trade for 5 minutes, and if it's profitable by at least 80 ticks, which is also my stop, and if price has moved against me, then I should get out. But I'm not going to check that now because I want to show that to you later. I'm going to fill it in now, okay? And I'll check it later. I'm going to run it with just price target and stop initially. Okay, so I want to trade 1 contract. Let's say I start at 6:31 in the morning, 1 minute after, and then I want to stop at 12:29. So that should give me enough time until near close time, which is I've flattened everything at 12:59, so it's going to get out of whatever trade I'm in. Up, down, doesn't matter, it's getting out. Okay, and so I'm going to get out at 12:59. Now, these are Pacific Standard Time for anybody who's wondering. I am in Los Angeles, and so that is basically what I'm looking for. I'm looking for short trades today. And so let's see if I've got everything situated here. Wednesday, let's make sure that it has enough room here. So let's pick 02, I don't want it to run every single Wednesday, so let's just pick it from 21 until today, the 23rd. That's the start and end date for the time frame. And so everything else I'm going to leave as is. You notice that I had slippage at 1 tick. So it's going to take slippage off on both ends of the trade. So let's reconfirm, and this is what anybody who's trading this system should do. Always confirm whatever parameters you put in. You don't want to make a mistake on that part, okay? So double check, triple check if you have to. It's okay to be paranoid and triple check to make sure everything's correct, especially if you're trading live now. And so I have 5,000 for the net session profit limit, 1,100 for the net session loss limit, max etc. loss trades 4. I have currently not checked move stop, which is what I want. My price target is 550 ticks. It's $5 a tick on NQ. And then risk per trade is 80, so I have a $400 risk going into this, knowing I could lose $400 several times, okay? Because it goes up to, 1,100 or 4 consecutive losses. Whichever one of those two hits first, it's going to stop trading. So I could have, potentially, if I took 3 losses in a row and all my stops were taken out, that'd be 400 times 3, that's $1,200. So when the third trade is flat and I'm down 1,200, it would be more than that 1,100, and the system would stop looking for trades. Okay, so this way I've managed how much risk I'm going to take into the market. Remember, you don't want to get into the market thinking about your profit. That's the incorrect way of thinking about trading. The correct way of thinking about trading is to think about how much loss you can potentially have. You protect against that, and then once you've done that, as the trades come and go, you'll see what happens in the end. Okay, the profits come after you've made sure that your risk has been accounted for. Okay, moreover, if I know that I can afford that $1,200 loss, then I'm okay with that. So assuming I'm okay with losing $1,200 today, I'm okay with that. Mentally, I'm prepared. So I'm going to turn this on. Okay, let's see what the market gives me. Once I turn it on, we'll know. All right, so it's enabled. I'm going to flip on my sell algo here under special operations. Go short, event driven. There are 2 fields here. I'm only going to focus on trade start time 6. So let's pick our instrument. We're going to pick NQ. So that's what we want. E-mini NASDAQ 100 futures, NQ. All right, let's go and run this. This is hypothetical, guys. These results are not guaranteed, whatever you see. All right, $5,515. That accounts for slippage. It doesn't account for number of trades, the commission for the trades. So we had 8 trades. So if you were paying, let's say, $4 per trade round trip, that's $32. So subtract the $32 from $5,515. Okay, so you had 37.50% win rate, which again I've said this in other videos. Win rate means very little. Okay, you could have had a 20% or 15% win rate and still been up a lot. I've seen systems that have developed systems that had very low rate in back tests, very low win rate, but a tremendous profit. It all depends on what you're doing, okay, how you set up the trade. Huge difference, okay? So on average, usually you see about 30% on the commercial side. A lot of algos, they hover around 30%, but that's just what the average is. It could be 20, it could be 40, it could be 50, it all depends. But when you get to 90 or 95 or 97, and I've seen those too, the only way they can do that is have an inverse risk to reward ratio, and that's not something I recommend. Okay, so this is what it is. Let's take a look at the chart. And so let's see what happened on the chart. Okay, so this is how it started trading. It had a couple of losses right off the bat. Okay, so it had a loss here, bam, took out the stop. Let me zoom in so you guys can see everything correctly. Okay, took out the stop. It was initially going in the right direction. Boom. They're very typical in the market, right? Everybody who's been trading has seen this a million times. So that happened. This one, it basically got the signal here, and it went long. It went short, excuse me, and got taken out. Okay, stop loss, stop loss. You're down 800 around. Okay, the next one, boom. That was a big win. That hit the profit target. So that hit the 550 tick profit target. All right, so now you'd be up because you're down 160 ticks, you're up 550. Okay, because 80 ticks you're down for the stop, 80 ticks you're down for the stop, that's 160. 550 for the profit target, you're up right now. So the next one took a loss. You're lost another 80 points from what you were up. The next one took another 80 loss. All right. The third one, the next one, the fifth one, excuse me, it was completely in the right direction. And now we're going to talk about move stop. Well, after this, we're going to talk about move stop and why I developed that to address this very issue. This very issue. Price was going in your direction. I mean, this is a fantastic, beautiful move down. Okay, it's gorgeous. It's as good as it gets. I mean, you had a tiny bit of move against you right here, but that was it. Okay, it just went in your direction. But guess what happened? And this has happened, by the way, in the market to many people. And if you've been trading, boom, the stop got taken out. I mean, the trade was definitely in your favor, but it went against you ultimately. Why? Because of an exit issue. Not an entry issue, an exit issue. Okay, we're going to discuss that and fix that exit issue with my next demo right here in the next minute or two. Let's continue to see if anything else happened. Okay, there was one other trade, another big one it looks like. When you see that beautiful green dot, dot, dot all the way down. That's a beauty. That's a beauty. Boom. And actually it would have gone even more. So 550 got out. It entered again. The very next trade. And it looks like that's going to be a beauty as well. And that's how we're going to get out. Looks like towards the end. Let's see. Flatten everything. Okay, so basically what that means is that's the setting we put here. For flatten everything, remember I put 1259. That was checked. Exit open positions, check. Exit time, 1259. It exited at 12:59 right at the top. When the bar opens, it exited. That's when it closes at 1 o'clock. So at the open of the bar, it exited and it booked that profit. Okay. So now let's go back to the overall. So we have the summary. That's 55.15. Now I'm going to add what I had stated earlier. Move stop. Okay. Move stop is saying, let me redefine what this is saying here, these parameters. Move stop is saying, if you've checked this, if you've been in the trade for at least 5 minutes, why? Because this is five and this is a 1 minute bar and 1 minute chart, so it's every minute. So 5 minutes, at least 5 minutes, and if the trade at the close of the bar is up at least 80 ticks, and I put that 80 only to match the risk that I have, the stop that I have for 80. I could have put 100, I could have put double the risk, 160. I chose to put 80. And if you have price move against you, so check adverse price, that's optional. You could have, I could say, for example, I don't want to check that. If I've been in the trade for 5 minutes and I'm up at least 5 minutes and I'm up at least 80 ticks, I want to exit at the close of that bar. Okay? I don't want to check if price has moved against me. But I do. That's a good feature. Okay? You want to check if price has moved against you. So I added that feature as well in version 4. So I'm also wanting to ensure that price has moved against me. And now I'm going to run it again. I'm not going to change the profit target. I'm not going to change the risk per trade. Okay? Let's run it again. So without move stop, just to reconfirm, it was 55.15. It had 8 trades. Now we're running it with move stop. So it was 55.15 without move stop. With move stop, it's 57.25. And you remember we had 8 trades. It was a 37.5% win rate. So more than half. So only 3 wins, 5 losses. In this case, we had 6 wins, 4 losses, thus a higher profit target, thus a lower max drawdown. Let's go ahead and see what happened. Let me zoom out and then we'll zoom back in, okay? So it started trading in the morning as usual. The trade entries are not going to change. What's going to happen is the exits, which will cause new entries if it exits sooner. So that's why you see 10 trades, not 8 trades, because it exited sooner at least twice. So let's go ahead and zoom on this. So the same 2 losses here. I'm down 800 right off the bat. Third trade, winner, it got out. You'll notice I'm going to zoom in more so you can see what happened. You'll notice that big green line. That means we won. So it was a winning trade. But it says stop loss, right? Remember, it's move stop. I moved the original stop that you had. I moved it and placed it to where it is. And I can explain that as to exactly how I do it in a Zoom demo if anybody's interested. Again, fill out the form on pinnaclequant.com. I'll be happy to explain it to you in our Zoom meeting. So it got out. Now, it entered again. Remember, this is an aggressive system. Special operations, incredibly aggressive. Okay? It entered the trade again. It got out this time with, it looks like, it hit the price target. So we hit the price target before the close. You'll notice it hit it right there. I got the 550 right there. So had it closed, move stop would have clicked in. Okay, but because we already got the profit target, remember, profit target is a limit order. That gets executed first. The market orders were going to happen at the close of the bar. That's how I've designed the system. The bar hadn't closed yet. We got the profit target before the bar closed, before this bar closed. So the next trade is not a winner, it's a loser. It was going in the right direction, but no, ultimately it didn't. It went against us. It's going to happen. Guaranteed to happen. You're going to have losses. That's a guarantee. I see it on YouTube all the time where guys talk about their wins only. Okay, you got to talk about both, guys. Wins and losses. Nobody, only wins. There's no such thing. So here, basically, we have another entry. Let's see if this time it hit the profit target. If I got close, stop loss again. So you would think, wow, it's a win and stop loss. Yes, remember, I moved the stop. The stop was here actually higher. It was 80 ticks above the entry price, right? It's up here somewhere. But I moved down the stop, okay? Book the profit. That's the whole point of move stop. It's attempting to book unrealized profit. That's the whole objective, okay? What happens if price moves against me? If certain parameters are met, if I have at least 80 ticks worth of profit, if we've been in the market at least 5 bars. It entered yet another trade. Here we go. 10.23 it looks like. Again, see? You see what was happening here, guys? Let me zoom out on this one actually. All right. So maybe it did it too much, but that's okay. Okay. So price was moving against us here. Okay. Move stop protected this because ultimately you were going to be taken out, or I in this case was going to be taken out in this hypothetical backtest. Okay. So the stop was going to be hit right around here somewhere. Okay. Instead, it booked the profit because I had move stop enabled. It grabbed it right there. I hope that makes sense. If it doesn't, during the Zoom demo, please ask me. I'll explain it further. In this case, the stop gets hit again. Took a loss. That's normal. You're going to have wins. You're going to have losses. What matters is what happens at the end. And here we go. Entered another short position. It booked the stop loss right here. Price had moved against me. It booked it right there. Okay. Same on the very next one. Let's see if this, again, same thing. Price moves against me here. We don't know if this is going to keep going. We don't know what the future holds. Okay. So imagine if you hadn't seen this, right? You saw that. How do I know this next green bar is not here or here or here? How do I know? I don't. So I booked the profit. I'm happy with it. I have at least 80 ticks. Price has moved against me here. Good. I'll book it. And let's see if we have any more. Oh, that's it. All right. So that was NQ for Wednesday. All right. We did it a couple of different ways. And there is the total net profit. Again, we've accounted for slippage, but before I forget, subtract approximately $40, depending on what you're paying your broker. Okay, some brokers charge, on average, it's like about $4 round trip on average, but some brokers charge a little bit less than that. Some brokers charge double that. Okay, it depends on your broker. So since that's something that you want to talk to them about, right? I can't quote you those rates, but let's say your broker says it's $5 round trip, then you would multiply that by this number of trades, total number of trades, 10 by 5, $50. You would subtract that $50 from $5,725. I hope that makes sense. Again, this was a hypothetical test. If you guys have any questions, please feel free to put your comments in the comment section below in this video, or you can email me directly, Rafi, R-A-F-F-I, at pinnaclequant.com. If you want to see a full demo of how this powerful, professional grade, and quite unique automated trading system works, please, again, request a demo from pinnaclequant.com, a Zoom demo. I'd be happy to schedule some time and explain this to you. Those demos take sometimes as little as 30 minutes, but they average around an hour. Okay? And until then, take care and God bless.